Hello and welcome to Market Insights, your go-to podcast for in-depth analysis of the Indian stock market. Today, we're diving deep into PG Electroplast, or PGEL, a fascinating player in the electronics manufacturing services space. Established in 2003, PGEL has evolved into a leading diversified electronics manufacturer, operating across multiple segments, from plastic molding to complete product assembly for some of India's biggest brands. Our aim is to unpack their business model, recent performance, and future prospects to help you make informed investment decisions. This analysis is purely for educational purposes and not a recommendation. PGL's strength lies in its well-diversified business model. They operate primarily in three key segments. First, we have the original equipment manufacturing, or OEM segment, where they produce complete finished goods, especially for room air conditioners, RACs, contributing significantly to their revenue. Second is component manufacturing, including plastic injection molding and sheet metal components, which supports various industries. And third, the original design manufacturing, or ODM segment, where they not only manufacture but also design products. This diversification not only reduces risk, but also allows them to capitalize on growth opportunities across different sectors, especially with the Make in India push. Let's turn our attention to PGEL's financial performance, which has been quite robust. For Q4 FY23, the company reported a remarkable 45% year-on-year revenue growth, reaching 648 crore rupees. Profit after tax also saw a significant jump of 38% year-on-year, standing at 27 crore rupees. For the full year FY23, revenue grew by 50% to 1,943 crore rupees, and net profit surged by an impressive 68% to 75 crore rupees. These numbers clearly reflect strong operational execution, increased capacity utilization, and successful integration of new clients and product lines, particularly in the RAC segment. Manufacturing the company's consistent growth from plastic molding to sheet metal and painting and ability to scale them to offer integrated solutions, reducing lead times and costs for clients. Secondly, a strong and diversified client base, including major Indian consumer durable brands, provides revenue stability. Thirdly, their focus on backward integration, for example, manufacturing critical components in-house, improves efficiency and quality control. Lastly, their ability to consistently expand capacity, evidenced by recent capex, positions them well to capture increasing demand, especially with the government's Production-Linked Incentive, or PLI scheme, boosting domestic manufacturing. While PGEL's growth story is compelling, it's crucial for investors to be aware of potential risks. Firstly, intense competition from both domestic and international players in the EMS segment could impact margins. Secondly, volatility in raw material prices, such as plastics, copper, and steel, could affect profitability if not managed effectively. Thirdly, a slowdown in consumer spending or the broader economy could dampen demand for consumer durables, especially during challenging economic periods. Lastly, the ability to continuously innovate and adapt to rapidly evolving technology trends is critical. Failure to do so could lead to obsolescence. Careful monitoring of these factors is essential for any potential investor. In conclusion, PGL presents an interesting investment case for those looking at the long-term growth potential in India's electronics manufacturing sector. The company's diversified business model, strong financial performance, and strategic capacity expansions are significant tailwinds. The Make in India initiative and government support via PLI schemes further bolster its prospects. While risks like competition and raw material volatility exist, PGL's management has demonstrated agility in navigating these. Given its robust growth, strong operational performance, and expansion plans, PGL appears well-positioned to capitalize on the booming domestic demand for consumer durables and electronics. As always, conduct your own due diligence and consult a financial advisor before making any investment decisions. Thank you for tuning in to Market Insights.